What is going on, YouTube, Discord, and welcome back to another edition of Top Down Analysis with me, T. Hobbs. Today is October the 6th, 2024, year of our Lord. And man, what a week that we just experienced. What a week, man. I mean, consolidation for basically 4 out of the 5 days last week, and then finally another breakout for the Bulls. Essentially saying, hey, the rally's not over. We're going to keep going, right? I apologize for missing top-down analysis last week. I had some things going on with, it was my wife's birthday, so I wasn't really trying to get on the charts like that. But we're back for another top-down analysis, and I want to thank you guys so much for tuning into all the videos my man Jay Seals have been dropping, pushing the channel over the 2,200 mark. We're at 2,250 subs, I think, like that, something like that. It's crazy. It's crazy just to see the growth, even after we've gone off the live streams, and just continuing to see the support on the channel. So thank you guys so much for that. But as you know, we'll be here breaking down the S&P 500, the Dow Jones, the NASDAQ. We'll take a look at the news. We'll look at the volatility index, little things that I look at. I'll show you my levels. I'll show you my predictions for the week, up and down, right? You have a bearish and a bullish plan, and it's just up to you to do what you want to do with that, right? So that being said, let's jump right into the charts. All right, so we got the Dow Jones up here to the top left. We got the S&P 500 over here to the right, and then we have down here on the left, NASDAQ, and then right here on the right, we have the volatility index. So in no particular order, just going to start over here to the left. If we look at the monthly time frame, right, we have 25 days and 3 hours left in the month, right, on all of these instruments, but we don't really care about that. What we care about is how the month is starting, right? The first week of the month usually sets the sentiment of the market, right, or of the month, right? Essentially, whoever comes out in top in that first week, it usually is a sign that we're trying to head in that direction versus going in the opposite direction, right? Not always, because you can see these down wicks, meaning that we started down and then we ended up popping back up. But for the most part, we end up putting in a higher high and a higher low if we're going to be in an uptrend. So if you look at this and you look at every single candle to start the month, you can already start to see the wick, right? The long wick, the inverted hammer candle on every single instrument. That's a win for the Bulls. There's not much more to be said for that, except for if you were to put a Fibonacci retracement on the previous month, right? I usually only keep 50% on my Fibonacci retracements. But if I go to 30 and 70, you can see that how aggressive these bulls are being, because they're not even letting price come back down to 50% of the previous month. Instead, they're starting to buy price at about the 70% mark, which is another key sign that buyers are looking to be interested very early on in the month, right? For whatever reason, fundamentally, you know what I mean? Like, the technicals tell me that thus far in the month, the bulls are winning. If we take a look at the same thing over on the S&P 500, right? We take that 50% retracement and we come down like this, right? You can see we're nowhere near the 50%. But if you turn on 70, right? Look at that. We're tapping right back into the 70%. The same thing over here on the NASDAQ, which has been the weaker of the three instruments, however, right? But if we turn on the 30 and the 70, you can see that the NASDAQ is tapping right into that level, right? I'll move that out of the way so you guys can see it. The NASDAQ is tapping right into that level, which again tells me that the bulls are very strong going into the month of October. Now, let's drop down to the weekly time frame and we'll break down all of the information that we can gather or that I can see on the weekly time frame before we bring in some of our levels, right? All right, so if we're looking at the weekly time frame, we got a double bottom over here on the NASDAQ. We got a double bottom here on the NASDAQ. We got that same double bottom, but it's more of a higher low on the Dow Jones. Same thing on the S&P 500 because they pretty much follow each other. We got the low from August 5th after all of that selling. We bought all of that back up, ended up creating somewhat of a cup and handle on the S&P 500, and now we're rallying back above that. If you're familiar with how a cup and handle rolls, the objective is just to get back above this current high right here, which we did. We did that and some, right? So now the market's probably looking to push back above 58.23, which was the all-time high on the S&P 500. We look at the Dow Jones, it's very, very similar price action. The market's going to be looking to put in these all-time highs above 43,000 and keep climbing. I'll give you my levels in regards to the weekly time frame when we drop down to the 4 hour and I bring out all of my levels for the instruments. If we're looking at the weekly on the NASDAQ, the reason why I say it's been the weaker instrument is because structurally it's just behind where everybody else is. Whereas the other two instruments have already gone to all-time highs, pulled back, pushed in another all-time highs, and now pulled back and looking for another all-time high. The NASDAQ has not yet gotten over its 21,231, which was the all-time high that was set when we changed contracts, right? The NASDAQ is the only instrument of the three that has not reached an all-time high since the contract rollover. I expect that to change because I have a yearly prediction on the NASDAQ for over 23,000, right? So I think we're just getting warmed up for the last leg of the year. We have earnings reports coming out, a lot of things that are going to be fueling the bullish rally to continue with the, the election around the corner, all that stuff. We'll get into all of that later in a different video, but those are the prediction, or that's the breakdown for the weekly. Let's go down to the daily time frame. And again, time is fractal. So I'm going to push through these levels really quickly so we can get to the actual levels. Essentially, whatever the market is doing on the monthly, whatever it's doing on the weekly, you best believe it's doing that same thing on the daily, 4 hour, and down from there, right? So if we look at the daily, this was that consolidation that we talked about, right? You can look at it on any instrument. I'm just referencing the S&P 500 because it's right here, right? If we start from Monday, September the 30th, we came down into this level. Now, 57.35 was super key for us to break. Even more key for us to break if we were going to be bearish was 56.74. We didn't even sniff that level. Didn't even sniff it, right? Therefore, we swept 57.35. We popped right back up after consolidating for 1, 2, 3 days. And then the last and final day, Friday, we weren't able to come back down to this level. We held these wicks and then we pushed up. So what do you think the market's looking to do next? This is a full body candle on the daily time frame. No sellers were able to push price back. Therefore, if we have a full body candle, I do not expect these buyers to want to go underwater. These are swing traders, right? Like they've been buying. I don't expect them to just give this up. They're going to look to target these highs because that's what's going to put them in profit. It's the same thing on the Dow Jones, the same thing on the NASDAQ. There's no reason to go over all of this information when it's just really repetitive in regards to the structure. Let's break down the 4 hour chart and I'll break down my levels for the week. We'll get into the news for the week and then we'll talk about the volatility index and I'll get you guys out of here, right? So before we continue, I'm going to go ahead and go over here to my object tree. And I have predetermined levels on the top down analysis. And I'll just turn those on for each and every instrument. So give me 1 second, just bear with me. All right, there we go. Okay, cool. So before I go down to the 4 hour, I want to take a look at the weekly time frame first, because this is where my predictions for the week come in, right? And it will blow up the Dow Jones. I'll give you those levels, then we'll switch over to the S&P 500, vice versa, right? All right, so weekly predictions on average over the last 9 weeks, right? I did the math myself, or you can check on your data, indicator or whatever you have. But over the last 9 weeks, the average weekly movement for the Dow Jones is at 2.45%. Now, what I used as a constant, right? And we'll take some of these purple lines off, but what I used as a constant, meaning where I'm starting that average from, is just 50% of the previous week's price action, right? So if we're talking previous week, we're talking about last week going, not this week, right? So that weekly average is 42,428. 50% is where we sit at 42,428, right? If we go up 2.45%, we're sitting at 43,473 for the end of the week. If we go down, right, to the bearish side, we're looking at 41,395. Now, when you put it like that, right, and you just look at the probability of us coming back to here versus the probability of us continuing and going here, well, for me, the probability is high that we're going to go to the bullish side. You can decipher it however you want, right? But anyway, so those are my predictions for the end of the week. Let's see how we're looking intraday, right? So if we look here on the 4 hour, if you guys are interested in joining the Discord, I'll show you kind of what these boxes are. We call it the chessboard. Essentially, it's just how we look at consolidation. If you're interested in joining the Discord, the link is in the description down below. You don't have to, but we grind every day and we live trade every day in there if that's something you're interested in. All right, so what are we looking at? I'm looking for a breakout above the previous day high at 42,668. The next target that I'll be targeting inside of that breakout is the daily wick of this of September 27th. That level sits at 42,832. Potential rejection of that level so that we kind of range in between the previous day high and that daily wick. And then if we get even more bullish, we're going to be pushing into the 1 hour supply zone at 42,892. Now I'm specifically talking about Monday, but this can happen over a Monday, Tuesday, Wednesday. I don't know how price is going to be delivered, but these are the levels that I'm going to be looking for, right, to the upside. Finally, above this level, once we take out all of this supply here, right, we could do it right away. We could do it on Wednesday. I don't know when it's going to happen, but once we get above 43,000, then we're in blue sky territory. And that's when I'm going to be looking for my weekly level of 2.45% to hit. 43473 is the weekly target. Now, this could vary because we have CPI, PPI, right? Like these are larger fundamental catalysts that could really push the average to 3%, 4%, because inside of those 9 weeks, we have had some of those larger weeks, but this is just on average what the average is. So that's what I'm going to be watching. To the bearish side, if we're looking for actual rejections, you do not want to see the bulls get back above all-time highs. The first level I'm going to be looking to reject is the same thing. I'm going to be looking for the daily wick, CE, right? 50% of the wick on the daily to reject at 42,832. I would prefer, for the way that I like to trade, for the market to reject at the 1 hour supply at 42,892 through the all-time high at 43,000. If we reject in that area, what I'm looking for is a retest of all of this consolidation. See, in the past, this used to be a falling wedge, right? That's what we would call this. Out of the falling wedge came a rising wedge, right? That's what we would call this, right? So essentially what I'm looking for is the market to create somewhat of a buy box right here, right? Once we push into this area here, then I'm looking for price to reject and then come back and test 50% of this buy box, which would put us at the daily fib or the weekly fib at 42,460 or 42,428. A break below any of those key levels, right? Those are fair value levels. So a break below any of this would signify that the bears have taken control for the intraday price action. As long as we stay above 42,138, however, I do not give the nod to the bears whatsoever. So the market could sell off all the way down to these levels, and it wouldn't bother me a bit if I'm a swing trader. Once we start to break below 42,135, 42,000, or 41,000, once we give up that level, then I would be, a little bit fearful that the bears are potentially taking control. And I'll go over some reasons why you could be looking for that a little bit later. All right, so that's the Dow Jones. That's the instrument that I trade, so I take a little bit more time on that Dow Jones. Now, if we go over to the S&P 500, I can take these trend lines off because I really don't need them. But if we go over to the S&P 500, the average over the last 9 weeks of the weekly average is 2%, right? We're looking at 58.87 for a target for the week. To the bullish side, to the bearish side, we're looking at 56.55. I asked you the same question. With this cup and handle being formed, do you think it's more probable that we go up and target these highs, looking at the weekly 2% to the bullish side? Or do you think it's more probable after 4 days of consolidation and holding this level that we somehow break through this level and head back toward 56.55? Again, I have my thesis. I'm just asking you, rhetorical questions that you can answer on your own, right? But this is just my thesis, okay? So what am I looking for out of the S&P 500? 5,800 through roughly about the all-time high, up at about 58.30, 58.29, whatever it is. This essentially 58.03 level through 5,800 has been acting as strong resistance. So I'm expecting it to do somewhat similar to that. Maybe we run back up to 58.11, get a rejection, and then we just range around this area, right? Again, chessboard analogy. Check the Discord link if you want to know more about that. But essentially, I'm looking for the weekly fib to be retested, the daily fib to be retested at 57.7350, 57.7275. Essentially, after consolidating for 4 days, I do not expect this consolidation to break. If it does break after sweeping the high and then sweeping the low and then going higher, if this consolidation gives breaks, this is a massive failure for the bulls. And then I'm going to be looking to be bearish as long as we stay above 57.24, right? And remember this level off the daily. As long as we stay above this level, I'm going to be looking to continue in the bull direction. All bearish activity will be retracements back into structure as long as we're above 57.24 all week. I do not care about anything else that happens in this market. As long as this level holds, everything above it will be bullish. And we're just pulling that off the macro time frame, okay? So where am I looking at participating price to start the week? Well, this is the level that I kind of forgot to add here. But if I'm looking at the S&P 500 above 5830, now this is the bullish case, right? So I'm expecting this level to break. And once we get above 5830, it's just going to be like 10-point moves is how I would play this, right? Because there's no actual structure above us. Understanding that the weekly time frame is going to be at 5887. What I will do if I'm trading the Dow Jones, which I will be on a daily, I'll go back and give myself like the last 9 days, 10 days. I'll take all of that data, compile it, and I'll divide it to get an average daily movement. And that will be intraday what I will be targeting if we get above all-time highs. A lot of people don't like to trade above all-time highs because there's no real structure. You just have to adapt or move on, right? I choose to adapt by using statistics, what has happened in the past as potential targets. I will even go as far as to say this percentage is basically supply that you know is coming in the future, right? So if you're using order flow or stuff like that, you could probably see that supply sitting up there as well. But essentially, above 5830, I'm looking to be bullish into 5887, potentially 5900. But again, like I said, we have a CPI week, all that good stuff. So the catalyst can be, the fundamental catalyst can drive us much further, all right? To the bear side, you're looking for the bulls or you're looking for the bears to defend anywhere between this 4-hour supply zone, right? You want to see them defend 5800 through 5820. Last line of defense will be that 5830 resistance from the all-time high level. If they can defend, you want to see them come back down. And again, grain of salt, but anything at this weekly fib, I would probably be exiting my bearish position, right? Because every single retracement thus far has basically shown that it's just that. It's just a retracement to go higher. So my targets would be 5820 through 5800 short, looking to target 5773, potentially 5749. And like I said, below 5724, my thesis changes to break and retest below 5724, looking to target 5655, right? Obviously understand that there's a cluster of price action right here that the market could definitely react to. But I'm not looking at this area until price starts to come down to this area. That's why I really don't have a plan for it on the weekly right now. I'm more so looking at this as all bullish, right? Until proven otherwise with the intraday price action. Let's move on over to the NASDAQ, which I know a lot of the audience trades. And yeah, it's more of the same, right? If we look at the 4-hour time frame, right? We have a ton of real estate above us, which is why if I'm a trader that requires the supply and demand above me, the NASDAQ is a better instrument to trade right now because it has structure above us. I don't really care for it. I like to stay on one instrument, but I understand the reasoning behind it. Now, as far as our weekly predictions to the bullish side, we're looking at 4.48%, which sits us at about 20,975.50, just shy of the all-time high. Now, with CPI and PPI and FOMC minutes coming up this week, I could very well see us trading back above that all-time high if we start to get very bullish. Now, to the bearish side, we got that same 4.48%, which lines up with a 4-hour demand zone down here at 19,159.75. I'm completely comfortable whether the market wants to go bearish and or bullish. It doesn't really matter to me. These are just the average weekly predictions based off the last 9 weeks. Now, as far as the intraday price action goes, we want to see price get above, or if you're a bear, you don't want to see price get above 20,321. This is a next to last line of defense on the 4-hour. We still have a 4-hour supply zone that sits at about 20,404 that I did not mark. I just marked it with 20,538. My thesis is if we take out this supply zone, we're not going to stop here. We're just going to continue to push. But I will be paying attention to this area intraday if that happens, right? For some of the Discord members that trade the NASDAQ. Now, if you're a bear or if you understand, like, prior to CPI, the market likes to consolidate sometimes. But lately, to be honest, if we're going to be bullish for CPI, the market starts that shit on Sunday night. I'm not even going to lie to you. Like lately, watching how price has been acting, if we're going to be bullish for CPI, the markets has started that rally. And then when CPI comes, it just rallies even further. So it wouldn't surprise me if we just start taking out this supply zone inside of the Tokyo session. But to the bullish side, if we get above, I'm looking for price to get above 323, then we'll be looking to target 20,403, 20,538, and then above 538, I'll be looking for break and retest above 538, targeting the daily supply zone at 20,830.25, and then ultimately targeting our weekly prediction at 20,975. To the bearish side, like I said, the same thesis. I'm looking for rejections in this area, targeting first the daily fib at 20,102, essentially just a retest of this consolidation. Then the weekly fib at 20,075, breaking below the previous day low would be like a warning track. And then anything that doesn't hold, I should say, this demand zone here. I'm not going to say this level because the NASDAQ sporadically moves a little more, but 19,774 through 19,561 needs to hold, right? Because if it doesn't, we're going to be headed toward that weekly bearish prediction of 4.48%, in my opinion, down toward 19,168. So those are the levels on the NASDAQ, right? And the NASDAQ, the Dow Jones, and the S&P 500 for the 4-hour, the daily, the weekly, and the monthly. Now let's go over here to the volatility index, and I'll kind of break down some of the things that I'm seeing on the volatility index that don't necessarily agree with my bullish thesis, right? Like the first thing that I'll tell you is there's a beautiful cup and handle that's been forming on the volatility index, right? And it keeps doing this beautiful cup and handle, right, on the 4-hour time frame. But then if we zoom out again to the daily time frame, it's looking like it's trying to form that cup and handle again. Now, this is a bullish technical analysis breakdown, right? As far as the VIX goes, bullish activity on the VIX usually means bearish activity on the market. Now, let me explain that though, because we can have bullish activity where the VIX starts to rally, but a cup and handle can actually be good for the market in a bullish term. And let me explain. Because if we're forming the cup right now, right, while the VIX is forming the handle, it's pulling back, which gives the market an opportunity to go higher, right? Once the VIX gets down to its level, right, then it will push back up, which gives the market a time to pull back. So the VIX can still be forming a cup and handle and actually execute that cup and handle, getting back above 22.60, and the market can still be bullish, right? I want to make that very, very clear. This is something that I'm watching to see how this cup and handle plays out, but in no form, shape, or fashion am I saying that my bullish thesis is invalidated based off this cup and handle. It's just something that I'm paying attention to. Things that I'm watching for is for the volatility index to basically stay between this range, right? Doesn't have to give up these lows right here. It can just stay between this range and allow the market to push up naturally while also giving natural volatility into the market. So that's kind of how I'm looking at the volatility index. Let's take a look at the news for the week, right? And I've already referenced it a couple times, but Monday we don't have any red folder news. We do have some speakers that'll be speaking. Bowman, Kashkari, they call him Crash Kari. So we'll see what he has to say, right? October 8th, we have trade balance. Again, no red folder news Monday or Tuesday. So expect that consolidation that I was speaking about, or even a low volatility push to the up or downside, right? Then we roll into Wednesday where things get a little bit more spicy. We got crude oil inventories as usual. Goolsbee and Jefferson are speaking, but then we got the 101 10-year bond auction. Mark this on your chart because I guarantee this is going to cause some type of volatility in the market. I won't be in the market. Hopefully I'm not having a bad week where I'm still in the market by that time. And then it's followed by the FOMC meeting minutes and a bunch of speakers inside of the Tokyo session. We roll into Thursday where we got the big news. We got core CPI data, red folder news. This should be, honestly, like, if I'm being honest, fundamentally, CPI really doesn't matter anymore, to be honest, right? Like, when you think about it from a where we are standpoint, what the market's expecting, what the market's looking for, they're no longer really looking at inflation data. They're looking at employment data. That's why you saw last week non-farm payrolls took us with a crazy rally, because employment data is now the new, hey, how is the economy doing? because if the Fed's trying to raise rates, right, or lower rates, cut rates, the last thing he wants to see is the economy doing well, right? He wants to see jobs kind of breaking down, right? So the core CPI, although it's important, it's not as important anymore because we know we're getting a rate cut, right? We already been announced that, right? So, but we do have unemployment claims, which should be pretty volatile to the market. And then again, just the 30-year bond auction, again, mark that on your calendar at 101, which should cause some volatility. Heading into Friday, we got the same thing. Core PPI at that point, production or whatever, I can't remember exactly what it stands for. Ultimately, you just need to know it's red folder news, and it's going to move this market, right? Then at 10 a.m., which is even more important, in my opinion, for the instrument that I trade, consumer sentiment and inflation expectations will move the Dow Jones. So I'll be definitely sitting on my hands, or, you know, if I can get a setup before then. But at 10 a.m. is going to be a big one for Friday, October 10th or October the 11th. Last but not least, pay attention to your earnings calendar, because the market is getting ready for earnings of the big tech stocks. We'll cover that in next week's top-down analysis as we get closer to the election. We get closer to tech earnings, right? We'll cover Google. Like I think Google's about to have a big earnings report. It's the only instrument that technically is well below its all-time high and its end-of-year prediction. So I'm looking at Google as a very big potential rally for the end of the year that could really push this market very bullish. That being said, ladies and gentlemen, I wish you guys good luck going into the week of October the 7th. I really hope you guys trade well. I really hope this information finds you and helps you along your journey. That being said, my name is T. Hobbs. This is the Trader Shop, and we'll catch you guys on the next one, man. Peace.